Welcome to Markets Now. I'm Michelle Rook with Scott Barlick of Coima Barlick, and we're seeing kind of some mixed trade in the livestock futures this morning. Cattle kind of a little bit of pressure after contract highs yesterday. Hogs are back to the plus side, and we're mostly lower in the grains, except for a few fractional gains here in corn and wheat. All right, so let's talk a little bit, Scott, about the cattle market. We made new contract highs, not just in the feeders, but also in the live cattle futures yesterday. And so now I guess everybody wants to know this setback that we're seeing this morning. The market's been so resilient. Do we just keep grinding back up into those new highs?
Yeah, thanks for having me, Michelle. And it's been quite a ride, take your breath away kind of trade. So I'm not sure anybody knows what to expect, but just a little correction, I think a breath of air for anybody that's short or even guys that are trying to chase along might be okay, and I thought this morning with the stock market down that possibly that might be what we get, but every break that we've had in the live cattle, in the feeders, has been found buyers able to fight back and rally back to the higher, no matter, we are overbought. Market doesn't seem to care about that right now. Open interest is up every single day here, and another big jump yesterday. So we're having some pretty firm support to maintain this uptrend line, to try to put more on, even in the midst of other outside news, stock market being down. Just the resilience is still there.
I agree with you. We've talked about this resilience of this market, especially with the big correction that we've actually finally had in the stock market. We haven't seen much cash here this week, and we know that this has been really a cash-led rally. Supply and demand have both converged here for the perfect storm. I haven't seen much cash. What do you think? Will we develop after the cattle on feed? Will we be hired this week?
It's been very quiet this week. And, I think last week was a little bit of a surprise that, we've had such a cash-led market. Cash is king. That's what we talk about. And last week, the futures just took such a charge higher that cash was okay. I was going to ask 202. Now I'm up to 205. Then you're getting 207. It was kind of, it happened so fast. And that's what we saw more of this week. The fact that the April futures converged with northern cash, middle of March. Usually we don't have to have cash and the April board converge until about the end. We have that, it stays behind. Now we're, $1.85 higher than where northern cash even was last week. So for the cash this week, no surprise that the packer's sitting on his hands, because our asking prices just got, very confident. Producers have the leverage. Nobody's even sure what to ask again. Is it 210, 211, 212? I think the old highs was 212. So I would imagine there's a lot of targets sitting right there. So maybe this is an opportunity for the packer to say, hey, it got away from us again. Maybe they're just not going to chase it that hard. That would be what I would think we're going to see. It's just all of a sudden going to be quiet. We have all these high expectations that cash can really take off and should. We have tighter numbers. Fundamentals are there for that. And in that peak demand season, but it might just be more quieter, so they can get the boxes higher, slow down a little bit. Not that they're going to be able to do that forever. I mean, they're going to have to come after some cattle, but last week there was several packers and they needed them now. So kills might just be a little softer. Hopefully after the cattle on feed, they make a run, but as of now, they have not.
Yeah, that cattle on feed, though, is expected to be very bullish. And so certainly you could hang out and wait for some of that confirmation. Placement number, let's talk about that one in the cattle on feed, expected to be, 14 to 15% lower than last year?
Yeah, I'm a little surprised that it's that much lower. We've had so much of the Mexican border open talk happening, and just the fact that we pulled them back from the prior months. So it's just going to stand to say, hey, this cow herd is smaller. And it still is. We are seeing some heifer retention. So when we see heifer retention, that's also going to happen there, as we do keep some back for the cow herd. So it makes those feeder prices even higher and less of them to choose from. But and back to that Mexican border, I feel like that's been a little bit slower than expected. I mean, there was some expectations that we get to this 3,000 a head a day, and then it's going to be 6, then it's going to be 9. And what I'm hearing, not sure that it's getting up to those levels, that it's more sluggish. It is kind of slow. It's tapped out and could be for a longer period of time. So that's also adding to it. They're not coming across as fast as was expected. So there can be a little bit of a trap on the cattle on feed report when we have that friendly of numbers, into the estimates. So now it kind of has to be friendly, so that there's a little bit of a trap there that has me a little bit worried, but futures haven't worried much yet.
Yeah. And you mentioned the type feeder cattle numbers, and the cash index, I think, is at all-time highs. And that just kind of keeps fueling this feeder futures market, doesn't it?
Yep. Index staying strong. And, a time of year, you're looking at the end of March, and a lot of these northern sales have really slowed down. So it's going to be a southern index kind of market. The reason that you have August and September fall futures at a pretty good premium, because that's when a lot of the northern cattle, higher quality cattle, start to come back for sale. So the fact that it can do it now, it's just all the more impressive.
Right. Question: Wednesday, we had the storm that rolled through. We had a light slaughter, only 89,000 head kill. Are we going to see packers make that up here on Saturday, or what are you hearing there?
With the slow cash talk, I'm not hearing of a lot of packers that want to, keep going as quick as they needed to pull cattle this last week, selling cattle on Friday, and they were needing them Tuesday. And then, they were calling, never mind, we need a Monday. So the fact that they're pulling them that quick, I wouldn't see that they would be interested in just picking up extra days, because what the future's doing, what they're doing to replace anything behind them, it's going to be tough. So that would be how I would think they're going to handle it. Yet to be seen, I guess. But the demand has been so solid that, they can't just completely slow down, because I think there's some money to be made here this spring yet.
Yeah. Do I dare ask you how high you think we can go on the futures here? Because we don't have any chart projections, because we've never been in this area.
Right. And I think it was probably 2 years ago when we first said we could possibly get to 300. And then we were talking 300 feeders and 220 fats. And after the last sharp correction, I think all of those candles just kind of dimmed, and nobody thought we were going to be able to get back here again. And here we are. So I guess those old numbers, we just had to dust them back off again and say, yeah, see, we knew that all along. Right. But so I don't know. I feel like those are probably the numbers that are being talked about the most, would be the 220 fats. And we're 293.50 on some August feeders right now. So we're close enough. It's not going to surprise me. We're going to go print a 300 kind of number there.
Yeah. We're up a little this morning in the hogs, but it's been a down week and a slide for the most part. Exports yesterday on marketing year low. Fundamentals are starting to kind of turn a little bit more negative in that market, aren't they?
Yeah, I think the fundamentals had been something that were helping the hogs, in the midst of fighting tariff wars and, some negative news for the hogs. They had, some good cash, some good fundamentals to hold on, but I feel like that's maybe slipping a little bit. We're seeing somewhere around 8% down on exports for the year on a market that really needs the exports. Weight's a couple pounds over a year ago, and you're thinking, okay, we kind of had some of that on our side, so it's a little bit disappointing. It's been very herky-jerky, but had been kind of saying, I think summer hogs can get back over $1, but starting to be a little bit more of a struggle. We're going to need some good news from the tariff front if we're going to get it done, maybe now.
And let's talk about grains here. I would call corn and soybeans kind of sideways already this morning, because we have been trading in pretty narrow ranges despite wheat rallying this morning. Is this kind of what you think we can expect now for the next several sessions here? You got, maybe not you, but you got traders watching basketball. You're getting into end of month, end of quarter. You got the big reports and tariffs coming. So do they just sit on the sidelines?
It's just that kind of a market. I think it's a little bit just the time of the year for the grains as we're waiting for the acreage report. March can usually be that kind of time, that's how they're going to trade. It's kind of a year that I usually look at it. Option traders are starting to do straddles, which means they're just being short options, because we know that this is the time of the year the market can sit and not do a whole lot. And that's what we're seeing. pretty sideways trade. We kind of know last year's crop and what the demand's looking like, our ending stock number. No surprise. We're just really getting anxious for the next number, so we got to wait a little bit. And falling right in March Madness, why not, turn some of that on at 11 o'clock and see if the numbers, slow down just a little bit there. But, so not expecting a lot of big moves here in the next week. And then we got March 31. That's coming around on a Monday, a couple of Mondays from now. And then we'll finally have something else to talk about there.
Yeah, no doubt. But it'll probably be pretty choppy. A lot of positions squaring ahead of that. All right. Thanks so much, Scott Barlick with Coima Barlick. And that is Markets Now.